Good afternoon. My name is Scott Redler, Chief Strategic Officer at TTVLive.com. Welcome to today's recap. So it's Monday, and they shook the tree a little bit today. You know, Friday we got the hot jobs number. It seemed like they said, okay, we're okay with this, you know, and gave, I guess, a little false sense of security right into resistance, trying to hold things, you know, very elevated. And then today, futures started down, and then they hit them pretty quick. I wouldn't say they broke things by any means. And I think a lot of people and traders have been looking for some type of pullback to buy. It's just that it was kind of sneaky the way, you know, it was done today, because you felt like if they wanted to do this, you know, they could have done it on Friday instead. You know what, I guess after digesting the news over the weekend, you know, some sellers came out or whatever. At this point, all we know is we have different types of trends. You have an active trend, an intermediate trend, the macro trend, and we've been following the 8-day moving average, which was the first time it penetrated and closed a little bit below to give you a bit more of a two-way trade. So you look here at the chart of the SPX and you'll see, you know, basically we came right back into the upper end of resistance from where we broke, you know, where we basically broke down from in August. You know, you had your low, you had your double bottom with the red dog reversal, and then this was your, you know, potency, or the move that pretty much confirmed your double bottom. And then from there, he had this methodical move that was very impressive by the bulls. First was you pushing through the retest, and then from here, we've been basically holding the 8-day moving average for the majority of the move until today. We broke below the 8-day and below Friday's low. So early on, if you got out of some of your longs right around here or flipped short, you made some money, and then, you know, later in the day, we came off those lows. So at this point, you know, to be honest, I'm not really sure what to expect next. Maybe we see a bit more of sideways action here to figure out if this is the pivot to go from, or if, you know, we want to go down and test a little lower levels, like here, or even, you know, this wouldn't be so out of realm either. You know, you look at the spiders. I think you could draw that that trend a little differently from you know, from this gap and go when we took back the moving averages. So basically, you know, it broke it, and now the question is, will it stay on the right side of this accelerated trend, or, you know, will it pop right back above it and then continue? So we'll see. Right now, what we have is today's low to write down, which is the pivot at 206.95, still above the 21-day, still above all the moving averages. You know what? Bulls might have been a little spoiled. You know, shaking up sentiment is sometimes good. So we'll see, you know, what's happening next. At this point, I came in flat, did a few two-way trades, and I'm going home flat again. I think the market needs to prove a little bit more to me. You know, looking around the landscape, you know, not the best scenario that you know, that it tried to give back almost all of Friday here, but it's still held in there, you know, going sideways. I guess we might be in a little bit of a choppier pattern here. Look how long this sideways pattern had to go on before it gave you a move. And now, you know, I guess if you kind of draw this trend from the lows here, you know, still looks just fine. You know, tested the prior breakout area, which was this, which I had on my note, 117, bounced off at about $1, and, you know, we'll see again. You know, do we, you know, keep in this, you know, elevated fashion, or do they shake the tree a little bit and then perhaps go again? You know, this morning I said, you know, a few things had to happen in order to break below 2083 or 2088 in the SPX. One is, you know, the banks that were so strong on Friday, you know, they had to fill some of those gaps, and that's what happened. You look at Goldman Sachs. Goldman Sachs, you know, actually no, Goldman Sachs did not fill some of the gaps. So let's see which one of the banks have been the strongest. So Goldman Sachs actually held the gap from Friday. Look at JP Morgan. What did it do? It came into the gap, didn't quite hold all of it, but, you know, it's still okay. So not as supported as Goldman Sachs today. Let's see what Bank of America did. Bank of America came into the gap, which it had a bigger gap than most things, and now we'll figure out if you know, if this could hold and go sideways. So that's why, you know, people were saying, are you going to just buy the banks today? I'm like, you know what? The banks started moving before, okay, the hot jobs number. This was a viable pivot. This was a viable pivot. Here's where you got your follow through. So now, just like earnings, after a decent move, you have to let the moving averages catch up and let it go sideways. So we'll see what happens next with the banks. Banks just got a little ahead of themselves, so, you know, they punish people late to that type of party as well. You know, I was trying to figure out in high beta tech what kind of move could we have here. At this point, Apple still hanging in there. I was long it for most of the day. I did not take it home though. I figure maybe I'll give it another day to figure out what it wants to do. It's still hanging around. It held 120. It's hugging the 8-day. You do have, a chance that it would come back down to here. So I'm just trying to be a little bit cute. But the longer it goes, this sideways, it did try and show some relative strength. Perhaps it can continue higher. So this will help us also. Do we hold higher? Does today's low hold in a lot of the indices? If it does, Apple probably holds this. If this were to break here and go down to there, then there's probably some more downside action in some of the other indices. Amazon, what did you do? Not a heck of a lot. I mentioned this morning how it wasn't set up to buy, that it was extended from the 8-day. Well, now it's going sideways again, so maybe with a bit of time, it could break above that, but give it time considering, the size of the move that it had. So you don't want to be chasing these things. It does give you some decent moves when it goes, and right now, from, the earnings gap up, you still have this new accelerated trend that it is following. Google, what did you do today? Google hung in there, actually tested the 8-day. So, the problem is the 8-day, it's a very elevated moving average. So when it's above it, you definitely want to try and be long it. But, if it breaks it, as a momentum guy, you have to be a bit careful because strong stocks still go to the 21-day. So, but if you're an active trader and you're sitting in Google for, what's this, 25 points or so down to where the 21-day is, that might, make you a little upset or a little frustrated and anxious. So that's why, if you're trading a certain trend, you want to respect it. And as of right now, it's still holding this, but we'll see what happens here. The longer it holds it, the higher the probability you get another move. But at this point, it's come so far that you don't want to be caught during a little bit more of a shaking of the tree. Facebook was another thing that I focused on. I'm thinking that if, best in breed stock that gaps up after earnings, what type of pull-in does it have, which would also give me clues on the market. At this point, it's still pretty controlled. Portion of the gap is still filled. It didn't give you a full buy signal today, except for it really couldn't get below Friday's low. So, it held in there while some of the other indices came down. So at this point, still above the 8-day. Lots of nice pivots that we traded here. I was looking for more of like a red dog reversal type move like that to get in. And so I'm going to wait. Maybe tomorrow we get that, where it comes below, comes back above, and then that's one buy. And then if it were to clear this pivot to go back towards highs, that would be your next. So at this point, it's still just building. Oil, bit of a, not a problem, but the market doesn't like to see oil go back to low ends of ranges. In the middle of ranges, it's fine, but low ends of ranges, people start to notice, and it's starting to get back to the lower end of the range. So that does have an effect on this sector, which also, is pretty. There's a decent amount of it in the S&P. We've had nice moves in some of these oil names. So the question is like same way after this move that we had. The question was, could it continue? Okay, and it actually came in a little bit before it made new highs. So now at this point, the question is, does it hold around here to show some commitment to this recent move? And right now you're about the top third of it. So you want to see it go sideways to maybe go again, not just fall right back into this channel here. Okay, or who cares? Even if you sold it into that news, I think some guys might even still be short from that cute short last Thursday. But for broader market implications, if it starts heading back into here and and the USOs start breaking 1410 or 1405 or something like that, chances are it could raise volatility and make the market a lot more choppy. So when markets are choppy, then all of a sudden we're back to two-way trading versus trying to be in portfolio approach and playing breakouts, et cetera, et cetera. So when they're choppy, though, it does help some of the shorts get out and help some guys make money both ways. The IBB, what did you do? Actually showed us some relative strength throughout the course of the day. Holding this past breakout, I guess this is your point of reference here. It's 323. See if that holds, moving forward. This was your last buyable pivot. So if you sold some strength into this prior resistance or into, approaching the moving averages, maybe you're looking here. With this, it's still trying to hold on the right side of this, potentially new trend, which it's in its early stages. So we shall see. Okay, and so with all that said, today they shook the tree. Nothing crazy. They just made some longs feel or think about whether they're committed to them or not. last Thursday I did get out of most of my swing longs, and I was thinking we were going to get a pullback. I thought maybe Friday. It didn't happen Friday. It happened today. Did test a few things out today. At this point, I'm going to still take a little bit more of a tactical approach, wait to see some clear-cut pivots or give me a bit more clues that I could put back 3, 4, 5 positions versus just tactically trying to trade. And, tomorrow's another day. Hope you were prepared today and you made some adjustments where necessary. See you tomorrow morning at the morning call.